Should you buy now or should you wait? I'm getting a lot of questions about affordability, rising interest rates, crazy San Jose prices. Today we're going to get into the actual payments, so stay tuned. Today I have again with me Mike Annie from Mosaic Mortgage. We're going to break down some of the actual payments for the San Jose median home price today at today's interest rates with predictions of rates increasing. If you've been watching my market update videos, I'll link those above. You know that rates and prices have been going up. So what does that mean for affordability? Should you wait and hope that the market slows down, or should you just jump in and buy now? Well, we're going to get into the actual payments so you have a feeling of what that is. And at the end, we're going to give you a rule of thumb to understand what rising interest rates mean to your purchasing power. So Mike, why don't you go ahead and show us some payments?
Excellent. Yeah, what we're going to put together for you, obviously we are forecasting prices to continue to increase as well as interest rates. So we've put together two different brackets and we'll share the visual here. We wanted to show what the same house payment does with different increasing interest rates and keeping the house payment the same, but also keeping the sales price the same with increasing interest rates and showing what that payment does. So I'll share that on the screen here and I'll kind of walk you through what we prepared.
Perfect.
So what we've done is we've prepared two horizontal graphs that starting with January 2022, that's where we're at now. What we did is we illustrated the median sales price with the prevailing interest rate just for round numbers at 4%. What we wanted to do, what we can see here is the monthly payment is at this amount here. We wanted to keep that payment relatively constant between a couple different interest rate increases, and then showing what that does here. So with a 0.5% rate increase, that lowers the buying power about 5%, right? Mm-hmm. Roughly, $75,000 here, $65,000 for an interest rate of 0.5% to keep the monthly payment the same.
Got it.
Right. Extending that a little bit further, with a 1% higher interest rate, the payment reduces, the purchase price reduces to 1.4.
Wow. So $140,000, almost 10%.
Correct. To keep the monthly payment the same.
Yep.
Right. So what you will see here is, of course, the monthly payments for the loan are about the same. The property taxes are going to adjust just slightly, but it's basically, it kind of pretty clearly shows us that a 1% raise in interest rate translates into a reduction of just about 10%.
Got it. Yep.
Right. So on the opposite side, looking at keeping the sales price aside, if we need to be at that 155 range, the median price, keeping that the same over these same options, showing an interest rate increase of 0.5%, then the monthly payment increases by $331 for a 0.5% increase in interest rate.
Okay.
Right? Conversely, as we add that on to, take that a little farther with a 1% increase of interest rate, of course, then we see a much more significant number.
Perfect. Right? Okay.
So being prepared in going through your own math, your own budgets, and identifying where we need to be to maximize your affordability and your buying power in advance, because it's hard to chase this math as you're moving forward looking at offers. So if we know what your high end is going to be from the beginning and being prepared, that's key to winning anything in this market. Okay.
So can you tell me, now that you're meeting, when you're meeting with clients, you talk about incomes and affordability. So if we were looking at this worst case scenario of a 1% higher interest rate and staying at that same purchasing price, what kind of income does a buyer need to have today to afford that?
For the median sales price of 155 at a rate at 4%, assuming there was no other debt, credit cards, car payments, student loans, things like that, the income required is $215,000 per household. For either an individual or co-borrowers, $215,000 to qualify.
Okay, and that 1% interest rate increase, how does that affect the income levels required?
To keep everything static in the same, the income needs to increase to $235,000. So you need an additional $20K of annual income to qualify for the new interest rate.
Got it. So we're talking about the monthly payment difference. That $747, ouch, is a little bit much. So Mike, what would you do when you're working with clients to help them understand or prepare for this?
So with our clients, we do have a budget exercise that we put them through, because in order to really determine what we can do, we have to look at what we've been doing for the last 60 days. Because generally, as we go through affordability, if we're looking at the price point of the price difference of about $500 a month, we could normally find that in spending that's currently happening, because one way or another, normally before you commit to a higher house payment, you have residual income. You can make these different choices for, luxury items or discretional spending that you may make a different choice on. So by looking at your checking accounts, credit card accounts, every account where dollars leave you,
Yeah.
and analyzing that and going through, we can normally on average find between $500 and $750 a month for borrowers, just to figure out, not that they're spending more money, but to put it to use and to better work, right?
Yeah. So be intentional about it, basically.
Completely intentional, but also looking at the existing debt that we have. And sometimes we do need to restructure debt in order to, again, realign those dollars to a higher purpose.
Perfect. Okay, so that monthly difference in that 1% interest rate might be in your budget, and you can help them work on that.
Yep. Normally it's already there. The dollars are leaving you in a different way. So if we can just realign them into something that's more purposeful and we're aware of, that's the whole difference to being able to really stay as competitive as a buyer in this market.
Perfect. Well, thank you for that extra financial tip.
Excellent.
Okay, so I hope that you find that information really valuable, putting some actual numbers in the place. If you have more questions for myself or Mike, or would like to go through some of the affordability, maybe how you can tighten your monthly budget to make up that difference in interest rate increase, definitely reach out to us. We'll put the contact information down below, or comment with your questions. Thanks.
Thanks so much.